Welcome, Secretary Summers. Nice to see you again. Recession, why are you jumping to that conclusion?
There are no certainties, but this recovery has been going for a long time. Financial market conditions, as measured in the stock market, as measured in credit spreads, as measured in inversions in part of the yield curve, are flashing very cautionary signs. There's lots of signs of economic difficulty in China. Some of the more forward-looking economic indicators are suggesting a cause for concern. All of that suggests to me that the risks are now more on the downside than on the upside over the next 2 years. And I think the odds are now better than 50-50 that we'll have a recession in the next 2 years.
All those things that you mentioned, I mean, we talk about them on CNBC all day long. They point to slowing growth. I'm not sure about recession, though. There's also increasing chatter about a soft landing. I mean, can you really go from a year of 3% growth all the way into recession very quickly?
Well, my prediction was a prediction over the next 2 years. I don't think it's likely that within the next few months the NBER will ultimately assess that a recession began. But if you allow 2 years, I think that's plenty of time. And I think we need to recognize that in almost every case, recessions were not anticipated 9 months ahead. And in that context, it seems to me, given history, given the length of the recovery, given the other factors that I mentioned, that's the direction where our concern needs to go, especially in light of the fact that in the United States, in Europe, and in Japan, in all the cases, inflation is now running distinctly below the target 2% level and is expected to do so for quite some time to come.
Mr. Secretary, is that change in direction for the economy now inevitable, or are there policy responses that could prevent this slowdown or indeed the recession that you would recommend to the administration right now?
Just to repeat, what I said was I thought the odds were better than 50-50 that we would have a recession. I didn't say we would.
I said all slowdown.
Definitely have a recession. I think the direction the Fed has been moving towards signaling that its greater concern is with slowdown and maintaining the flow of credit is the right one. I think there's no question that signs from the United States that it was going to be an international cooperator on issues relating to trade, on issues relating to support for global finance, on issues relating to support for the IMF, support for developing countries that have financial emergencies. I think all of that would be a contributor to confidence. I think a sense that policy would move quickly if a slowdown comes to start spending more on infrastructure. I think all of that would be welcome. And I guess a sense that we're not going to shoot ourselves in the foot with protectionist steps or with measures like keeping the government closed for months or with other thunderbolts of unpredictability would also contribute to confidence.
And then there's the Fed. Last time we spoke to you, Larry, you were somewhat critical and said the Fed did not need to raise interest rates in December. Are you pleased to see that Powell's changed his tone considerably when it comes to flexibility around policy, the balance sheet, and even how he's looking at some of the market risks?
I think I said a moment ago that I thought the Fed's movements towards showing concern with slowing and opening up the possibility of flexibility were very welcome. And we'll have to see what their signals are in the next few months, and even more important, what steps they take. But certainly right now, I think we're at a place where for the foreseeable future, the data could change at some point. But on current data, the risks of rate increases, I think, are far exceeded by, are far greater than any benefits that might come from rate increases.